What's up, everyone? Thanks for joining me here at Bitcoin and Crypto News. Today is July 30th, 2021, and today's the day that $1.6 billion worth of Bitcoin futures were set to hit the market. So in today's video, we're going to take a look into that and what impact, if any, it may have on the market, as well as other news from around the space, and dive into the current price action. So without any further ado, let's take a look at what's going on in the Bitcoin and crypto market. Switching over to CoinGecko, as we take a look at the price action, you can see we're still trending sideways. Bitcoin currently is trading at $39,024, down 1.8% for the day. Ethereum's at $2,343, up 0.7%. And as we go through the top 10, the biggest gainers are XRP at 2.9%, Uniswap ranked at number 11, up 2.7%. We do have Chainlink, which surpassed $20 and is up 11.5%, trading at $21.15. Essentially, the entire market is basically just trading sideways. And most likely, we're not going to see that change until Bitcoin either breaks above around $42,000 or breaks below $35,000, where the current lines of support and resistance are. But that's enough of the price action, so let's get into the news. And with our first news story, let's dive right into those expiring Bitcoin futures. Deribit, the world's largest crypto operation exchange by volume and open interest, settled monthly options today, Friday, July 30th, on contracts worth $1.6 billion. Earlier today, Bitcoin slipped from around $39,800 down to $38,500 around 4 a.m. Eastern Time, which was the designated settlement time on the Deribit futures. A total of 41,000 contracts expired, of which 22,000 were call options and the rest were put options. The overall market mood has been bearish since the beginning of the month, and when prices dipped below the critical support of $30,000 on July 20th. With the market still having a bearish sentiment, if the price were to dump after the expirations, that would mean that we were most likely heading lower, back to the low $30,000 or perhaps even below. Whereas earlier in the year, when futures expirations came, it meant a small correction, which was quickly swallowed up and the prices continued to climb higher while the market was so bullish. However, thus far, Bitcoin has bounced well above the July expiration max pain point of $35,000 and was facing downward pressure from those who were short on the market. Overall, the market is continuing to slowly become slightly more bullish with each passing day. As we switch over to the Fear and Greed Index, you can see we're currently up to 53% and a neutral rating, up from last week's low of 23% where we were in extreme fear. But of course, this can flip once the price in Bitcoin moves. The key levels for today is if we can regain that $40,000 mark and hold that as support, or if we drop down to around $35,000. Of course, more sideways action is possible since the market and investors seem to be in agreement that no one really knows what's next for Bitcoin. One thing that is certain for life, aside from death and taxes, is that Microstrategy will continue to be buying Bitcoin. Which brings us to our next story. While speaking Thursday, Michael Saylor, the CEO of Microstrategy, said during the company's second quarter earning announcement they will continue to invest in its digital asset strategy. The company, who already owns over 105,000 Bitcoins, has no plans on stopping soon. And considering that Jerome Powell and members of the Fed seem to have no interest on raising the interest rates, there's really no reason why Michael Saylor will stop borrowing essentially free money to purchase, as he calls it, the most pristine asset of all time, which is Bitcoin. Companies owning Bitcoin is a trend that will continue to become more and more popular as time passes, and companies need to find a place to put their capital that isn't being inflated away. According to buybitcoinworldwide.com, Tesla is still in second place behind MicroStrategy, who hold approximately 42,000 Bitcoin, followed by Digital Galaxy Holdings and Voyager Digital at approximately 12,000. As the only four public companies with more than 10,000 Bitcoins on their balance sheet, a list that will surely expand and see some new companies top the leaderboard in the coming years, like Amazon, Google, Facebook, and many other large corporations who will find themselves knocking at Bitcoin's door. And if you want proof of this, look no further than a recent report that came to us from Dylan LeClaire, co-founder of analytics and advisory firm 21st Paradigm. According to the report, high net worth individuals have a clear interest in Bitcoin at the current prices. Although the market is trading sideways, that does not mean that the rich and powerful do not want to get their hands on your Bitcoin. Around 57,000 Bitcoin left exchanges in a single day this past Wednesday, while Thursday saw Kraken alone shift a giant 98,000 Bitcoin to their exchange to keep up with the accelerating buys across the market. During times like this, I always think back to one of my favorite sayings, that bull markets make you feel good and bear markets make you rich. So yeah, Everybody was loving life when Bitcoin was trading around $65,000. But for the long-term investors like myself who buy into Bitcoin every week, it certainly is much nicer to dollar cost average in at around $40,000 as opposed to $65,000. And while things are quiet, that tends to be the best time to put your money in. If you look around the market or even just crypto Twitter, the sentiment has been extremely negative. Even the fear and greed index was extremely fearful just a week ago, and it's still only neutral. These are the times where you want to be buying. As a long-term investor, when the market is negative and people feel the price is going to go down, that's usually a good time to dollar cost average, since if everybody's saying it's going to go down, it most likely is going to do the opposite and rise up. And that's just generally in a market. It's even more so true with an asset that has as much promise and potential as Bitcoin. There's a reason that major companies and even some countries are stacking some major sats. But not all is sunny in Cryptopia. On top of all the recent news coming out about BlockFi and their potential regulation, the largest crypto exchange, Binance, continues to be attacked from all sides. Authorities in India are investigating whether Binance's WazirX was used in a money laundering operation related to betting apps that have collected more than $134 million in the past 10 months, according to a Bloomberg report that came out earlier today. India's anti-money laundering agency, the Enforcement Directorate, wants to question Binance executives and is waiting for their response, according to Bloomberg, who is citing unidentified people with knowledge of the issue. India's money laundering agency is investigating the Chinese-operated betting app that allegedly laundered some of these funds through the Binance-owned crypto exchange. Binance acquired WazirX in 2019. A spokesperson from Binance said that the company itself had not been contacted by any authorities in the matter. They were quoted as saying, "We did not receive any summons in June or July of this year." As per available information in the public domain, the summons was directed to only WazirX. And India isn't the only country cracking down on Binance. According to an announcement released Friday, the Securities Commission in Malaysia has served a public reprimand against Binance, calling for the exchange and all of its entities to cease operation in the country. Binance has been given 14 business days from July 26 to comply with the order that includes disabling its website, mobile apps, as well as discontinuing any media campaign for services in the country. The announcement also mandated Binance's CEO, Changpeng Zhao, to ensure full compliance with the order. Malaysia's security regulator also urged its citizens to stop trading with crypto exchanges operating in the country illegally. In response to all of the negative feedback that Binance has been receiving, they have plans to set up physical headquarters in multiple jurisdictions. Binance's CEO, Changpeng Zhao, said his firm's decentralized structure is difficult for regulators to wrap their head around. Following the uproar of the past few weeks, ZZ said he would implement a more traditional structure. He was quoted as saying, we don't have a headquarters, and a lot of regulators scratch their heads at that. They really couldn't understand an organization like that. So now we'll go for a standard structure that regulators around the world understand and are more comfortable with. ZZ has also offered to step down so that somebody with more of a regulatory background could take over. So only time will tell what will come of all of these investigations, but they have certainly caused a major stir across the globe. Our last story brings us to the US, who of course can't be left out of the news when it comes to crypto. There was a new bill introduced by United States House Democrat Don Beyer of Virginia that has proposed a far-reaching regulatory and legal framework for digital assets across the board, titled the Digital Asset Market Structure and Investor Protection Act of 2021. Once again, you can see the emphasis on investor protection. Although I would argue that the crypto market is the most free and open market, especially when you compare it to the United States stock market, which is basically funded by the government and not allowed to go through a correction, the United States government is clear on their message that crypto is not safe, and they're here to protect the investors. The bill touches on virtually all of the important gray areas that continue to exist regarding cryptocurrencies in the U.S. One of the main goals is to set clearer definitions for digital assets and digital asset securities. Also, when it comes to the central bank digital currencies, the bill seeks to pave the way for the Federal Reserve to issue a digital dollar by explicitly designing it as the only institution with the authority to do so. Notably, it calls for the U.S. Treasury Secretary to have the power to either permit or prohibit U.S. dollars and other fiat-based stablecoins. What this bill really comes down to, aside from setting down clearer definitions on digital assets and digital asset securities, is for the United States government to try to take back control of the dollar-denominated stablecoins. This looks as an attempt to either take down Tether, USDC, and other similar making their one uniformed and centrally controlled stablecoin in the United States. As you can see, the question of if a central bank digital currency is coming has been answered. It is more than certainly on its way and has switched over to just a question of when. And this is another step in that direction. Alrighty, and that's all the news I have for you today. Thanks for hanging out with me. If you've enjoyed the video or if you found the information useful, please hit the thumbs up and also subscribe. That really helps the channel grow and get the video out to more people. Have a great day, and remember to keep on stacking those sats.